If your bank account was just frozen, don't close this video, because what I'm about to explain will determine whether you get your money back in days or remain locked out for weeks. In 2026, account freezes are not increasing because banks suddenly became evil. They are increasing because the financial system itself has been rewired, and most people have no idea the rules changed. You check your app. Your balance is visible but unusable. Your debit card declines. Maybe you see the word restricted or under review, and your first instinct is to assume a mistake. But here's the uncomfortable truth. In modern banking, freezes are rarely accidents. They are triggered events. Here's the expectation most people have. I deposited my money, I transferred my own funds, I did nothing illegal, so nothing should happen. But here's the first twist. Banks no longer evaluate you as a person. They evaluate you as a behavioral pattern. Every account in 2026 operates under 3 invisible surveillance layers: anti-money laundering compliance, automated fraud detection, and behavioral risk scoring models powered by machine learning. System level 1 is AML. Banks are legally required under federal law to monitor, detect, and report suspicious activity, and they are required to do it without informing you if a suspicious activity report is being considered. Which means when you call and ask, "Why is my account frozen?" the representative often cannot legally tell you the full reason. Large cash deposits, structured deposits just under reporting thresholds, rapid movement of funds in and out, sudden spikes in transaction volume, international wire transfers to high-risk jurisdictions, repeated peer-to-peer transfers through Zelle, Cash App, or PayPal. These are not just transactions, they are data signals. System level 2 is fraud AI. And this is where 2026 changed the game. Banks now run anomaly detection systems that compare your real-time behavior against millions of historical fraud cases. And if your transaction fingerprint resembles previously flagged accounts, even if you personally did nothing wrong, your risk score rises instantly. This is the micro twist most people never realize. You are not being accused, you are being scored. And scoring systems do not think in terms of good person or bad person, they think in probabilities. System level 3 is behavioral continuity analysis. If your spending pattern suddenly breaks from your historical baseline. For example, you normally spend $2,000 a month and suddenly move $15,000 in 48 hours, or you normally transact domestically and suddenly initiate an overseas wire, the system interprets deviation as risk. Now here's the second twist, automation speed. In the past, a compliance officer might manually review unusual activity over days. Today, the freeze can happen in seconds before any human ever sees your name. This is why more people in 2026 feel blindsided. Transactions are faster, but restrictions are faster too. So what actually happens behind the scenes when your account freezes? First, your account is flagged and temporarily restricted. Second, an internal case is generated and routed either to fraud operations or compliance review. Third, the system checks whether documentation is required. If it's a fraud alert, the bank may simply attempt to verify your identity and recent transactions, and resolution can happen within 24 to 72 hours. If it's AML or compliance, the process is deeper. They may request proof of source of funds, employment verification, invoices, contracts, tax returns, or written explanations, and this can take 1 to 3 weeks depending on complexity. Here's the intention reveal. Banks freeze first because regulators punish them for missing suspicious activity far more aggressively than they punish them for temporarily inconveniencing you. From the bank's perspective, freezing is defensive compliance. Now let's shift to control. What should you do immediately if your account is frozen? Step 1. Do not panic move money across linked accounts, because rapid external transfers can escalate the case. Step 2. Contact the bank and calmly ask which department is handling the review, fraud or compliance, because timelines differ. Step 3. Ask exactly what documentation is required and submit it in complete form the first time. Partial responses, slow cases. Step 4. Document case numbers and dates. Step 5. Maintain consistent communication, but avoid aggressive threats because once a compliance case is open, frontline representatives cannot override it. Now prevention, which is the part most people ignore. Keep transaction behavior consistent with your historical profile. Avoid sudden, unexplained large deposits. Break large legitimate transfers into planned, documented movements with clear memos when appropriate. Ensure your contact details are updated so fraud verification texts don't fail. Avoid using multiple peer-to-peer apps in rapid succession for large amounts. And always maintain a secondary bank account so you are never financially paralyzed during a review. Here's the haunting close most won't tell you. Your bank account in 2026 is not just a storage vault. It is a live algorithmic profile updating in real time. The system is not emotional, but it is relentless. If you understand how the scoring works, you reduce your chances of triggering it. If you ignore it, you gamble with access to your own money. The old banking world was built on human discretion. The new one runs on automated probability. Most people never understand how these systems work. If you don't want to be one of them, subscribe.